Hello, everybody. Ed, as always, again, thank you for coming in. For those of you who don't know, my name is Jelani, and welcome to the 11th episode of the DeSci Rising series put on by DeSci World, where, as always, our goal here is to provide an opportunity for many of the wonderful projects that are listed on our growing DeSci World dashboard to just kind of formally introduce themselves, their team, update their progress, highlight their achievements, and just generally engage with both the DeSci World community, but also the wider DeSci community. And the idea behind all that is basically that we very much believe, we at DeSci World very much believe that more than the tech, more than the funding, it is the community using these tools that will usher in many of the changes that we are looking for DeSci to bring to, the various legacy STEM industries. Now, leaning a little bit more into that, in today's episode, I have the pleasure of speaking with Matteo Manzi, who is the lead quant researcher at CrunchDAO, which is a platform that leverages the strength of Web3's collective intelligence, almost hive mind, to build, among many other things, trading signals for next generation financial insights. Now, you might be wondering, what that has to do with DeSci, but I'm sure Matteo will take the time to kind of walk us through that. And in fact, the motto that is on their website is that they merge DeFi with DeSci. And so, without further ado, welcome, Matteo, and thank you for taking the time to help us learn more about yourself, but also what CrunchDAO is building.
Thank you. Thank you very much for the introduction. It's a pleasure to be in this space, as I said before. So where do I start from? I would say it's maybe easy for me to start historically from my personal perspective. I started doing a PhD in academia on a subfield of aerospace engineering, working on the application of machine learning for uncertainty quantification in certain dynamical systems appearing in aerospace engineering. I didn't really like academia, and that's why I left it. But I love doing research. I was also interested in quantitative finance, coming from that perspective specifically. So the use of machine learning in finance. This is a field that's been growing in the last, since the big rise of AI. A big author in the field is Marco Lopez de Prado, aiming at rationalizing quantitative finance using the perspective of data science and machine learning. But there's another perspective which I'd like to underline more, which is more traditional, let's say, building on physics, mathematical physics. In fact, there's this field that came out in the 90s called econophysics, which aims at, I think the best way of thinking about it, rationalizing finance and economics. So rationalizing, I mean tackling it with a scientific perspective. So using a scientific framework, using not only a quantitative approach, but also a rational. One can be quantitative and not rational. Markets can also be irrational, but maybe we can analyze them in a rational way. So I guess this is partially a way to explain how finance and science can go together. How can we put together DeSci and DeFi? I would say that's a third implication, a natural implication, the third step of a three-step reasoning. The first one is this one I said. So there's a deep connection between scientific approaches and the construction of financial tools, of tools to interact with financial market. Specifically, CrunchDAO is doing it with the US stock market for now. We're also touching into the crypto market, looking at it not from a tool perspective, but as a market. And so this is the first step, I think. The second one is talking about why DeFi and hedge fund can be associated. And the third implication, which is the one we have to try to discuss now, which is about going from DeFi to DeSci, I think comes naturally. There's been this trend about trying to put into a rational framework the appearing irrationality of the crowds. And so that's why the expression wisdom of crowds came out. The idea is to be able to use, in particular machine learning, but in general, ensembling approaches to put together people to tackle complex problems. The CrunchDAO perspective is to think about complex problems in a dynamical system framework. And so the market is a natural choice because markets, they arise because people buy and sell, there are news, there are things happening, but it's basically a complex dynamical system in which one can think about time series analysis, data-driven dynamical system, stochastic modeling, uncertain quantification, optimal control, which are all things appearing not only in finance, but to give some examples, the modeling of the atmosphere, the weather, so how clouds move, the space weather, so the activity of the sun, how this evolves, and how this impacts and interacts with the geomagnetic region around the Earth. So the vision of CrunchDAO is to tackle all these problems using tools associated with ensemble learning, which again are both a consequence, let's say, built both on machine learning and computer science, but also on ensemble theory of statistical physics. And so again, there's this deep connection between AI and more traditional science. Given that there is this push, and I'll now focus more on investment research, focusing on crowdsourcing alpha, so crowdsourcing predictive power. There's also the need to build the infrastructure that incentivizes people to actually participate into this framework. And so that's how DeFi and the use of smart contracts and blockchain technology comes into play in the context of CrunchDAO. I think this is a long answer, but I think with these two big steps, defining the framework, the third one, which is the one we're attempting to answer today, is kind of implied, I hope.
Yeah. No, it comes together very nicely, right? It's kind of a layered, not a layered conundrum, but a layered view of the space. Um, so to reiterate, the major scientific crutch for, not crutch, but the major scientific substance of CrunchDAO is this machine learning, this ensemble learning, as you call it,
Yeah.
that'll help power not just, financial, because you did kind of allude that this is one use case, but there may be other use case coming from CrunchDAO, whether it be like you said, the modeling or um, modeling of other systems, or the utility of this as a model for other systems. Um, but yeah, I can see the link. I'm coming to see the link between that and DeSci now.
Yeah. I'm trying to push with this bigger perspective because it's something actually this week I just pushed a lot on. Fingers crossed, we have a paper reviewing on advances in space research, which is a paper about the modeling of the thermospheric density field. If that goes through, we hope to kick off a collaboration with the Max Planck Institute, focusing on this aspect. But yeah, maybe I understated how much we're spending our energies on trying to solve the market problem. So we have this big tournament. Okay, it was good.
Yeah, that's good.
We have this weekly tournament which builds on financial data. And this pipeline builds on a tournament of people building data-driven models, predictive models. And we use these ensembling techniques coupled with traditional portfolio optimization coming from the finance of the 50s and 60s, Markowitz, to basically build an infrastructure between the individual DAO member, the individual tournament player, and the interaction of the signal provider with the US market. So it's really, I would say, an infrastructure. The pipeline puts together the interests, aligns the incentive. That's a big expression in DeSci. I think it's a good expression, but aligning the incentive between the DAO member, the individual DAO member, and the DAO as a whole.
Well, that's interesting. So, because I imagine you have, not imagine, on your website you can clearly see it, but you have two ends of this equation, right? You have the data scientists, those who are performing or building infrastructure, and you also have the user who eventually would become the end user. And so, are you applying concepts of like paper trading so not actual trading, to further this machine learning? Is this all the training steps for the infrastructure that is currently going on? Is that what the point of this tournament is, or these tournaments?
It's not really. I mean, it's not a game in which each person builds his predictive model and then has a paper trading on it. Each model is put together in a machinery using ensemble learning, dimensional reduction. So it's kind of a layered machine learning problem in which people, DAO members, are able to do the work of quants, which have been traditionally characterized by a silos-like approach in which one can foster diversity of outcomes. And then these are all put together with a layered machine learning approach. And then the paper trading, which is currently on, is done on only one signal, which is the outcome of the ensembling of all the signals. And then people get a reward based on how good their model were. And this reward builds this feedback loop between the market, which tells us something at the DAO level as a whole, and we feedback this back to the individual DAO member.
So, as somebody who is not fully technical literate to the extent with which you're very elegantly described.
Sorry, I'm nerdy. Yeah, it's also Friday. I'm after a work of technical things. I speak like this. Sorry.
No, it's perfectly fine. It's perfectly fine. I'm curious. So you made this distinction where CrunchDAO is currently modeling or developing these trading signals for legacy markets, so not necessarily crypto markets. Is there involvement of are there particular are these trading signals being pointed at particular stocks? Are they what is the feedback?
Mm-hmm.
What is it that people are trading actually with in CrunchDAO?
Yeah, so for now there is a data set which we provide and we share. It's an anonymized data set, so we can afford to buy it and then share it without giving away too much, but giving away enough for people to be able to participate in DAO and build predictive models. These data are, we believe, I mean, that's an assumption, but contain predictive power on the behavior of it's called the Russell 3000. So it's a bigger, it's the same as the S&P 500, but bigger. So the first 3,000 stocks in the US market in terms of market cap.
Yeah.
And the problem of the CrunchDAO tournament is about being able to rank the stocks, so the assets in this pool of we call it a universe, in this pool of objects, which are not always constant. Just today we were seeing some companies move to Japan, and so we have to remove them, and others merge. But okay, let's say around 3,000 companies, and then ranking them, we are able to use a subset of portfolio theory to have an optimal product which can serve an hedge fund. And let's say the design choices of this product are pretty much risk aversion. So we are neutral to dollar, neutral to many industry factor, style factor, and volatility, of course. So yeah, the idea is that each person in the tournament builds predictive model about the behavior of the US stock market and the big stocks. Okay. And then we use that information, that crowdsource information, to build a portfolio.
Okay, and so these endpoint readouts, the actual prediction of the stock market, what does that actually mean? Is it just stock go up, stock go down, or is there a depth to it that is a little bit more granular?
There is definitely a depth in the sense that it's not just a classification. I'll talk technical again, but it's a regression. So how much will it go up and how much will it go down? And also, CrunchDAO focuses on what's called specific return. So it's how much will it go up or down with respect to a simplified model that models the future, the short-term behavior of stocks. So there are traditional finance models. And I have to say this is also related again to aerospace engineering, in which one has a partial knowledge of the dynamical system, defining the evolution of an object. And yeah, so we are asking the machine learning model to give us the missing term, the missing component, the smallest, the smallest signal hidden under the noise. There is a clear signal. We extract that. We give away the apparent noisy component, and we ask the DAO members to find some juice in it.
I see. So you're basically abstracting away everything that is not the minimal viable unit, or the minimal
Yep.
practical unit, to determine what is causing this whatever particular change is being evaluated.
Yeah, and also this goes in line with the fact that we want to be we want to have neutrality in the product. So we want to remove these obvious, let's say, trends in the market, because at the end of the day, at the end of the pipeline, we want also to remove exposure to these macroeconomy indices.
Yeah.
And so we want to just have a predictive power on the rest of it.
Okay. Well, let me ask you this, and this maybe steps a little bit away from the technical perspective. So, as you mentioned previously, you're looking for order in something that appears to be random or chaotic, right? We know markets are not necessarily driven by rationale. There's a lot of irrational movements, as we've seen throughout the years, in how markets operate. And so basically what you're developing is not, and just as I'm sure you know this, but just as a comment to the listeners, you're not ever going to approach a 100% fit, right? It's going to be almost asymptotic. Like, it's going to be something that approaches the best, because there's always going to be that level of, or I imagine there's always going to be that level of uncertainty that you just can't abstract away. It's not going to be something that can be, predict something to 100%.
Yeah, definitely. I mean, maybe, definitely. I mean, the fact that we can say that markets are rationalizable, understandable, let's say rationally, doesn't mean they are deterministic. This distinction is important. I mean, in the field of dynamical system, there's been this movement from determinism. This goes back to Laplace, to more modern views of dynamical system theory. Poincaré is an example. At the beginning of the 1900s, he was a mathematician working with Einstein on special relativity mostly, but he did a lot of things. And then actually, I'm a big fan of a chemist called Ilya Prigozhin. He worked in Belgium on dissipative theory. And he really pushed out this idea that, according to him, in the 900s, there have been three revolutions: relativity, quantum mechanics, and irreversibility, the study of irreversibility of stochasticity, of indeterminism. So definitely, the fact that we can understand markets doesn't mean that they are deterministic. That's for sure. But it's also a question. We were discussing this last week, I think, about the level of analysis. For example, you said that markets are not efficient. That's mostly true, particularly in crypto. But there's a line of thought by a mathematician called Didier Sornet, doing an analysis on bubble detection. So this explosion of the value of assets, and trying to argue that these make sense in a higher abstraction level, because actually these bubbles trigger innovation. And so it depends what you mean by rational, because, okay, maybe Bitcoin is not worth this much, but the fact that Bitcoin is valued more than its actual value is a force that's making things more efficient in some more abstract way.
True. Yeah.
But definitely think, as Bouchot, a mathematician in Paris, says, free markets are wild markets.
Yes, they are. So, in terms of the utility of this predictive model outside of the market, but still relevant to DeSci, this is strictly determined. So, all of the input information is strictly coming from, like you said, like it's mentioned, the collective intelligence of the Web3 space. So these are people. So there's actually a limitation to what this predictive algorithm or this predictive, unit of knowledge can be applied to. So let's say for myself as a immunologist, as a neuroimmunologist, if I'm looking to predict the interaction of particular molecules in a cell or off of a signal pathway, that this cannot be applied to something like that because you need human input, and that's just not information that we can provide as humans, correct? So this is different from AI generated data driven predictive modeling.
Yeah, yeah, it's a sorry. One way of thinking about it is people in the loop optimization.
Right, right.
It's a big network, but people, individuals are part of it. It's not just an AutoML algorithm. So if you want, we can, yeah, it's basically a way of integrating the the priors, the prejudice of people. I don't know, the design choices inside the loop. And
Okay.
the assumption is that, and I mean, this is also proven mathematically. Ensemble learning solves what's called the bias variance dilemma.
Yes.
You know, qualitatively, if one person is super sure about something, they are more wrong. That's how the thing manifests in machine learning
Yeah.
models. And if they're doubtful, they're more correct, but they're uncertain on average. Ensembling allows you to be more exact, avoiding uncertainty
Yeah.
and overfitting. And so, yeah, there's a qualitative distinction between just fitting numbers and doing
Okay.
this ensembling.
Okay, so I do want to talk about the CrunchDAO as a platform itself, but I do have one more question. So you mentioned that there is potential for the application of this in terms of aerospace and even maybe environmental, right? We touched upon that very briefly. But
Yeah.
again, those are two spaces or entities that don't necessarily, like, I don't understand, where does the human component come into modeling of those two different regions? Because a human doesn't determine, like, us thinking that the weather will be nice one day is not going to determine the actual effect of the weather. Same way for aerospace, we might think that it may fly, but it may not fly. So where is this, how does this actually apply to those two niches?
Okay. I see what you're. Yeah. So I would say this goes in line with the cultural shift from determinism um, to a complex system approach to this modeling. Um, it's true that I mean, yeah, it depends on if you think whether these systems are deterministic or stochastic. If you think they're deterministic, okay, we can build one model to rule them all, and so we actually don't need all these people. But if we believe a statistical description of the system is necessary because of the high degree of uncertainty. So it's not that, I mean, tomorrow it's either going to rain or not. The fact that tomorrow there is a 60% probability of it raining doesn't mean that the fact that it's going to rain is a, I don't know, it's a Schrodinger's cat like phenomenon. But the outcome of our modeling is a probability. Because of that, we need to have a modeling framework which takes into account the possibility of modeling uncertainty, of having this ensembling perspective. We do this not because the systems are not deterministic. I mean, it also depends on what you mean by deterministic, but we do this because we know that they are highly complex. The knowledge on the current state is partial. So we have observation, for example, on the climate. We have observation on weather, but they're finite. And also we know that the systems that evolve that govern the evolution of the systems are highly nonlinear. And so the natural way forward is to have a modeling framework that allows to incorporate uncertain quantification. That's why there's some value in doing this ensembling in these problems particularly.
Okay. Okay, that's interesting. Um, to bring it back to CrunchDAO, the so is CrunchDAO, and I mean really back to like CrunchDAO and its actual infrastructure and everything. So CrunchDAO
Yeah.
is not in and of itself a DAO, is it?
Yeah, we are already the DAO with voting power associated with the with the ERC20 token.
Yep.
There is still some degree of concentration of decision power,
Okay.
but we are in the process of delegating it. Let's say so, the DAO is getting more and more involved with the decision making. This also goes together with DeSci and the fact that we are opening up the software we developed and the design choices we made at a more abstract level, so that DAO members can contribute. We have the UX of new DeSci platform will be out early next week, I think, and
Okay.
people will be able to DAO members will be able to log in into our paper with their MetaMask and propose changes to our white paper. So the idea is to have a continuous integration, continuous development white paper.
Oh, that's actually the first time that I've heard that in the DAO space.
Yeah,
I've
I
never.
like the
It
expression.
makes sense, right? You think it's like very obvious, but I've never heard that before. It's interesting. Okay.
And we have bounties. We have one now about staking. And we will pay them based on the judgment of the updates of the paper, basically. So we have this degree of centralization because of efficiency reasons. So we need to have everything in one place to be coherent, but also we need to be able to listen to many voices.
For sure.
And
So
sorry,
in
I'll take a
terms of
glass of water, otherwise I
no,
cannot speak.
no, please do. Um, One thing I'm curious about is, as in all cases, so these predictive models that you get that you not you but that the DAO generates, right? These I'm assuming are going to be like the idea that the quote unquote business model for this is that hedge funds and other individuals who are interested in predictive modeling for financial perspectives are interested to buy. So is this kind of like a selling of these trading? Are these going to be IP'd and then sold off to hedge funds, which will then generate revenue for the treasury and then loop everything together? Or how does that work for CrunchDAO?
Yeah, exactly. The most natural is the idea of using these signals and sell them to an hedge fund that can then back propagate again the reward by basically paying the trading the service fee buying the token, and so the value of the crunch hopefully follows the. I mean, of course, keeping the space open for the possibility of speculation, but follows the performance of the DAO itself and its reason of existence.
For sure.
But yeah, this is, let's say, approaching the private sector and having this signal to be sold. But
Well,
sorry.
no, I was just gonna say as I spend more time thinking about it, I as an immunologist, I related this back to obviously something that I'm biased towards in terms of molecular interaction and the like. But I imagine that a mass human generated predictive model would probably be more applicable to something like social sciences, psychological sciences, all these kind of things that may even predict human behavior, right? So I wonder if that is more like the better example of how it applies to decentralized, not just not that the other two examples that you brought up, the aerospace and the meteorological one it does, but it has there any consideration in terms of this predictive model being used for psychology and social studies?
Okay, no, I never thought about it. Mm.
Because essentially, and I may be completely wrong, so I'm just a little bit brainstorming here.
Yeah, if you can
Yeah,
outline a bit more what you're thinking about.
for sure, for sure. So, my limited understanding of how markets work is it's basically a hodgepodge. Markets are driven by psychosocial and what is the word for it? Neurological stimuli, right? So you seeing green may make you, so for example, the FOMO event, right? People trade based on FOMO. Massive amounts of
Okay,
retail
okay.
don't have strategies in terms of trading. And so what you're really doing is you're predicting human psychology as it relates to changes in market and what is going to happen. But that can apply to not just markets, right? That can apply to anything, whether anything that involves human-based decision making. So that's my question. In terms of psychological, predictive models, could your model also
Okay.
apply to these kind of spaces?
Okay, I would guess so. I mean, I would say so. An interesting line of research I followed from a researcher called Chris Rokakis from MIT is about machine learning applied to the pandemic, basically, and so to to having a robust, so uncertain quantification, taking into account uncertain quantification, modeling of the effect of policymaking for the evolution of the pandemic. So I don't know if this is kind of in line with what you were saying, but
No, that is
evolution
that
of the
was
pandemic is a consequence of the behavior of people.
for sure. That is exactly one thing that I was thinking about. Something a little bit closer or a little bit on a smaller scale would be like elections, right? I imagine
Right.
politicians and
Yeah.
governments would love to get their hands on a predictive engine, a very high
Mhm.
accurate predictive engine that may determine, where people are going to lean relative to an election, right? And as we know, the U.S.
Mhm.
elections
Mhm.
are coming up. So this is another, and that stems into political sciences, which are all aspects that we have
Yeah.
yet to
Yeah.
fully see in DeSci, but I think have a place in it if
Right.
using
Right.
centralized tech.
Yeah. Definitely. Definitely. But maybe, and this is my personal bias, but I like the idea of I like the perspective of endogenous drivers in financial markets. So the idea that, in some sense, free will must stop manifesting itself at the level of the stock market, and you can have a certain degree of confidence that your predictive model built solely on the endogenous state of the market has predictive power. And so in some sense it doesn't matter if the individual likes green, so that there's no consequence of I don't know of something being green or blue on the evolution of some price
I
sometimes.
don't know, Mateo. I don't know. I would argue. I can see why you would not. Why you guys are doing this with traditional markets versus crypto markets, because crypto markets is a whole
No,
different ball.
yeah, it's yeah, not sure. But also markets by themselves are that which has been rationalized, that's been quantified.
Yes. Yes.
So maybe we have to agree on the nomenclature. But no, it was more of a no. I agree definitely, and crypto for sure. I mean, there is more alpha in the meme coin doing 5,000% in 2 hours than in an optimal strategy on the on the fundamentals of Bitcoin. That's saying something about the status of the market.
For sure. Well, I mean, I was interested before, but now I'm even more interested because I think I'm starting to see the next level applications or the further endpoint utilities that can be generated from this model. But like I guess my next question is, I imagine that economists, machine learning data scientists have thought about this in the past, right? I don't mean to, I'm sure you guys are not the first to think about this. And
Yeah,
so
definitely not.
so then what in that case, what has sparked the incentive to develop it your own selves? Is there something that has stopped previous iterations that you think you can fix? Or can you speak a little bit more on that?
Yeah, specifically about financial markets, there have been some experiments in the last 10 years. Quantopian is the most famous one. There was no Web3, let's say. There was no token. And so it went down before, it was closed before actually starting. My understanding, and I don't know much about it, is that there was no way to have a proper community. And so it didn't build the critical mass. That's my understanding. Beside this, there are some other projects. There's a small one called Rocket Capital, I think, doing the same, using the same perspective on crypto markets only. So yeah, I mean, similar philosophy but different market.
So
Then there's, yeah,
no, go ahead, please.
yeah. I wanted to go to Numerai, which is basically the most similar thing. The first difference is this lack of synergy between the token and the performance of the fund. But also, we wanted to push forward this vision of being a place for complex system modeling and not just financial market.
Okay. So in essence, to boil that down, the reason why these things have been either less successful or non-successful in prior to Web3 is that there's really been no incentivization structure
Yeah,
to put
yeah.
in to
And
broaden.
Numerai being, I would say, I mean, it's still early for Numerai. They reached the, I mean, for us, it's even earlier. But they reached and Numerai, I didn't mention, but they have a token.
Okay. So
There
you,
isn't
I mean,
not this synergy between the hedge fund and the token, but there is a token.
okay. So on that particular point, how does the token synergize with CrunchDAO? So you did mention that it is an incentive for people to participate in the tournament, but is there other modes of synergy or incentivization that brings value to the token and people wanting to receive that token?
So the thing implemented now is that based on the performance in the tournament, you receive some tokens proportional to your ranking. We are currently in the first DeSci allowed enabled bounty, and the bounty will give token, not in a winner takes all framework, but will pay proportionate to the votes. So I would say the value of the token is in the intellectual property, which is not property because it's shared, but it's in the sharing of the knowledge and then in the putting into action of the member of the DAO.
Okay. I have a question. Feel free to not necessarily answer this for a variety of
Okay.
particular reasons. But so if I was to compare this, just to give people a framework of comparison. So with things
Yes.
like, Vita DAO and these IPNF, I don't want to specifically say Vita DAO, I should say is IPNFTs. There is this premise that people believe that, as contributors of the DAO, you holding the token that is tied to that IPNFT will, more or less directly raise the value of your token. Now, with CrunchDAO, let's say a hedge fund was to buy the predictive algorithm, right? Is there some back beyond the them having to utilize the token itself? Is there, structures of revenue share? Because, actually, let me ask this question first. A hedge fund looking to make use of this predictive algorithm, is this licensed to them or are they buying the rights to this predictive algorithm?
They cannot buy the predictive algorithm because every week we receive the signal comes from the DAO, goes up through this pipeline, which is pretty transparent, and then arrives to the hedge fund. So the hedge fund needs the DAO members as much as the DAO members need the hedge fund.
Oh, okay. So maybe I misunderstood something, or maybe I'm just having this misunderstanding. This this predictive algorithm or this predictive product, it's it's iterative. It changes
Yes,
each
every week.
tournament. And
Yes.
so, okay, I see. That's okay. I didn't understand. I thought this was
So yeah, no, the
full.
DAO members,
Okay,
we keep needing them, if you
okay.
know. Yes.
yes. Because that my question was
Um,
going to be like, what incentivizes further use once you've generated this predictive algorithm? But since it's continuously iterating on itself, that not makes more sense.
yeah. Yeah. Thanks for asking. Yeah. Sorry, I didn't clarify this. The IP of the model at the tournament level remains in the hands of the DAO member. The DAO member simply pushes us. It's the outcome of this process. Maybe a DAO member doesn't believe in machine learning, believes in throwing dice on this table and guessing randomly. Okay, welcome. We'll see. Maybe one day that will be an approach which is more powerful than machine learning today. Come and play, and we'll get your thing. Of course, we'll prevent. We have machineries that prevent people to destroy everything. But in principle, if that works, that will be part of the DAO, and that will be the outcome of the reward, of the continuous reward every week. We're actually trying to develop a feature which I think is interesting. That the idea is to have a daily scoring of each participant in the tournament, and so there's basically going to be an asset-like price evolution of a certain model, and we want to enable staking not only to avoid Sybil attacks, but also to let people stake on other people's models. So like an eToro, but a quant eToro on a machine learning slash Web3 copy trading.
Interesting. I like it. I think so. You mentioned tournament, and it's good that to see that there's some form of almost psychological, not, I don't want to say the word manipulation. It's not really manipulation, but GameFi. There's some level of GameFi that speaks to an individual's competitiveness, something to draw them in. So they're not just solely incentivized by, receiving the token, but there's almost this neurochemical incentivization structure that I think is almost more powerful than that uh, from the financial perspective. So that's interesting. It's a very good point to detail and how the
Yeah,
ability.
and we started digging into game theory a lot. You mentioned gamified. I'll try to take that word in a positive way and take the
Yes.
game theory approach of it. But no, really, because a simple game, which is the one we have now, is about the fact that each player is in his own room. As I said before, there's this silos-like framework, and each player is alone with each one has its own data, the same data. They have their own model, they have an outcome, and the reward is in each room is independent. But we're building a more complicated infrastructure in which the reward of player one is a consequence of the data of its model, but also the behavior of all the other players. This makes things more complicated, but more interesting at the higher level. This interestingness also introduces problems because you're a player. How can you hope to play a game whose rules change as a function of the behavior of other people playing it? So we need to build this infrastructure that lets people interact with it in a transparent way. But yeah, there is game theory, and so it's definitely a game because people have to bet on their predictions, have to adapt their action to the behavior of the others. And maybe here I see a connection with elections that I thought about before.
Yes.
Because one person could, when you go vote, you can vote for the person that represents you the most. Or you can say, given that the polls are saying this, I should vote this. And so you have this trade-off between the behavior of the crowd and your prior and your belief.
Well, I think that reflects a lot, or at least not maybe not a lot, but that reflects a significant portion of what happens in the real world as it relates to elections and
Yeah.
decisions, right? There's always this disparity between what you believe and what the herd is moving to, and also the futility of it, right? If you think that 80% of people are going to vote against you, that will
Yeah.
sway how you vote relative to your own particular choice.
Yeah.
Uh,
Yeah.
and this is why, again, adds another layer. This is why I think that at least maybe, abstraction and deconstruction of your model may actually also prove useful from a psychological analysis perspective of people of whatever cohort of individuals are making use of your platform. Um, it's interesting. I think there's a lot of layers here at CrunchDAO that can be deconstructed and looked into from a scientific perspective. It's very interesting.
Mm. Yeah, we should dig more into politics then.
Yeah,
I mean,
yeah.
it's interesting. We also been thinking about there's a lot to be done about not time series analysis, not systems, but images. You have satellite data, you have cancer detection algorithms. But I think the power of the ensembler is shown more in this dynamic behaviors, game theory behaviors, herd behavior. It's not an accident that all these people working on a physics approach to finance also look at I don't know how flocks move. You have these bees having a turbulent like behavior, and so yeah, we should definitely do more of that. One thing I would like to mention is this is a challenge, an open challenge, is the fact that said technically markets are highly non-Gaussian. So there are these high risk, high rare events which destroy all your assumptions. So I think it's going to be, and this came to mind when you said this dynamics reflects the real world. And I'm thinking out loud, this could be a problem because in the real world, optimization locally works until it doesn't. This is true in the real world, in the market, but also in the modeling choices of a tokenomics and of an algorithm. So it's important to take care of that.
That's absolutely right. The further away you look, the more things look smooth. But as you come in, you see more volatility. So on a smaller and smaller scale, everything becomes much less Gaussian. Yeah,
Yeah.
definitely. So let me ask you this then. In terms of, and you've mentioned a few particular things, but in terms of CrunchDAO's roadmap from this point onward, what can we expect, or what can somebody as a part of the community expect to see coming down the line?
Yeah, so the first thing is this DeSci interface. We have already a repository which is associated to a paper and mirrored on IPFS, which will take care of this, is taking care of this iterative CI/CD like white paper. People from next week will be able, even non-technical ones, and this is a thing we try to push for a lot. So I don't know, someone studied economy but doesn't know how to code. We would like him to come to our platform, participate in a bounty, and give his suggestions about what's wrong in our modeling.
I appreciate that. As a non-coder, Matteo, I can tell you right now, I very much appreciate this disclaimer.
Great. yeah, because yeah, it's important. Of course, the technical one can still go to GitHub, clone the repository, do his own Docker image, blah blah blah. But if someone just wants to edit some wording, some concept, he has to be able to do that, and we need that. So yeah, this will come next week, if not next week, the one after. Then more internally, our team will grow. The core team will grow soon, and this will impact our productivity on the hedge fund side, let's say, on the meta modeling side. Down the line, it's reasonable to assume that a first hedge fund will start interacting with the signal in January. That's the plan, and the paper trade next month. After that, as I said, there's this collaboration with Max Planck Institute. I hope to kick off mid-December, and this will also will open a new vertical for the. It won't be just a tournament; it will be also a data science platform, and we'll use this DeSci framework to publish a paper. So the idea is to have this paper on atmospheric density modeling done in collaboration with the Max Planck Institute. and then knock at the door of the European Space Agency with a paper written by 75 people saying, okay, cool, you founded the university, they did these results, we have this decentralized perspective, we did this other result. What do you think? That's the approach we'll take for the coming months.
I love it. Just
And
walk in and show them that you've done it yourself, and hey, let's talk about it. Have it, already read out ready for them. I think that is very much the approach that I think the majority of the DeSci space is working with, right? Have your proof of principle set up and just kick down doors so people can't refuse you.
yeah. Of course, you have to keep interacting with the real world, with the traditional world. Yeah, that's the perspective. Hedge fund, European Space Agency, universities. These are all allies. I think they most of them also see decentralization as an ally because they realize there are some issues, and also we see the issues of complete decentralization, and we need them to stay balanced.
Very good point. And so my last question to you would be, and this I ask the most organizations, how can the community help support you, the team, CrunchDAO, and Jenny?
So I would say come to our website, join our Discord. Let's start having a conversation. If you are good with software development, great. If you're not, you can contribute using your scientific perspective from the platform itself. Also, if you're not technical, it's difficult to rationalize and to include in tokenomics everything, and there are problems difficult to solve with retroactive founding. But hey, let's try to do something. If you arrive and you have an idea about I don't know, high level things like you said today, do this experiment on election data, even if you don't know how to do it. But that's an idea. We are eager to find problems to solve, and we already know many, but bring us your problem. That's the
Thank you
perspective.
for validating my silly question. Very much appreciated. And as I tell everybody, exactly that, right? Web3 is ideally going to be, especially in DeSci, a safe space for technically driven and non-technically driven people to come together and think of new, innovative ways to approach and solve a particular problem. So I think this speaks very much to that, and I appreciate you highlighting that. And so, okay, as we approach the top of the hour, I would like to open up the floor to questioning. The audience, if you have any questions, please, just come up and put in a request, and I will bring you up on stage, and you can ask Matteo anything that you are curious about in terms of CrunchDAO. While people, become less shy and think about their questions, I personally have one question. So I have a couple questions. So the first one is, are there prospective hedge funds that you guys are already in contact with or are looking at to maybe pitch this predictive engine to?
Yeah. As I said, we're working closely with one, and we should start in January. That will be the first, the main one. We'll start trading 1 million USD, and things will start. We'll start being in contact with taking punches in the face and giving them from January. So yeah, there is an hedge fund.
Okay, that's great. Yeah, you're right. This is time. That's what is that? We call that training day. That's the day that we start to see how effective.
Yeah. It's always, we had the live algos in the past, and it's always a different thing when it's live. And if you're paper trading, it's not just technically, but that's gonna be part of the track record. And
Yeah,
yeah, exciting.
I think there's a fundamental law in the universe that has been boiled down to a very simplistic terminology, and that is everybody has a plan until they get punched in the mouth.
Yes, I love that one.
Very fundamentally to most things, especially as a
That's
scientist.
Mike Tyson, right?
Exactly. As a scientist, I feel like we deal with this on the daily, and so we're very much used to it. But yes.
Yes.
The other question that I had is that you talk about the decentralized nature of your white paper. And as I think about that, I think it's a very neat idea, but I wonder, do you have stop gaps in place to avoid malicious editing or trolling editing of your white paper?
Yeah, so I basically, for now, the solution we have is I'll be the moderator, and so people can submit, and there's going to be of course, transparent in the sense that people will be able to see all the rejected modifications. But yeah, no one voted me. No one decided to have this moderator. But then the reasonable modifications, I mean, reasonable according to my biased prejudice, will be put in a vote. And so let's say I will take care of the trolls, and then the DAO members with their vote will decide among the reasonable ones what's worthy of updating the vision of CrunchDAO. Other ways of avoiding Sybil attacks on the paper, I have no idea. I'm really open to ideas on this.
Okay, that's interesting because I think, well, I'm not going to go too much into that, but let me ask you, and if you can't divulge this, please feel free to refrain from answering.
And I wanted to say something on what
Yes,
you
go ahead.
said,
Yes.
which first of all, I'm happy of how you. I like this interview, but about the taking punches in the face. DeSci should take some punches in the face, I think, in the
So
sense that it's good to anchor yourself to core reality, and having a hedge fund associated with what we're doing is gonna keep us punching in the face and throw away all the things you don't need and all the virtue signaling and wishful thinking you constructed in time. So
yes,
I think it's healthy and good.
no, I very much agree with you with that. In DeSci, there is a variety of camps of thought in terms of full decentralization, no decentralization, somewhere in between. And I think the most pragmatic form that we're going to come up with is this Web 2.5 iteration, where it's
Mm.
a healthy balance, not an
Mhm.
equal but an equitable balance on a case by case basis of decentralization and centralization. And we're only going to get to that, and each individual project is only going to get to that through being punched in the face repeatedly.
Yes.
So that's
Yes.
bound to happen. The thing that I like, that I have confidence, or at least optimism in for DeFi, a little bit different than DeFi. And the reason I say that is because you if you spend enough time in DeFi, you'll notice people get punched in the face and they disappear or they rug. What
Mm.
I'm hoping is that in DeFi, because builders
Oh,
tend to
okay.
be largely scientific, they're used to getting punched in the face and sticking to it. So I think
Mhm.
we'll have
Mhm.
a lot less. We'll have people who are willing to stand for the fight. So that's
Mhm.
my
Mhm.
optimism for that for sure.
Yeah.
But my question to you about your editing, your decentralized editing, is is this something that is done via Gitcoin, or is this something that you've developed as a backend for Crunch?
No, we didn't do anything with Bitcoin. I am aware of Bitcoin.
Bitcoin. Interested.
Um, but yeah, no, we did everything on Git, of course, and we integrated that with our own tokenomics. Uh, why is that? A good question. Maybe we should explore more and see if we can integrate this. An interesting point of contact we had recently is, I don't remember the name, but via the Smart Contract Research Forum, I interacted with, let me see, how's it called? The Block Science Labs. Uh, I think there's something there as well.
Okay, perfect. Well, Matteo, we've come to the top of the hour and nobody seems to have a question, which I'm going to take as in we've flushed out and had a deep enough conversation
Everything
such that
clearly.
everybody understands. That's how I'm going to take it. So,
Yes, yes.
no thing. So I would formally like to thank you very much again for coming up and helping us learn more about yourself and CrunchDAO. I know that you are part of a few other projects that may, fall into the DeSci category that are different from CrunchDAO. So I'm looking forward to having you back up
Yep.
to talk about these things, point Cafe as an example, and the like. But as it relates to this, again, thank you very much for spending the
Yep.
time to
Thanks.
mention.
No, it was a pleasure. Thanks a lot for the invitation.
Great.
Nice,
So
nice. I liked the interview. If I can give you a short term feedback, challenging enough,
I very much
punching in the face enough. I like punching. I like
appreciate.
taking punches.
Yes, we're all a little bit masochistic as scientists for sure. Thank you for those kind words. Um, for everybody who's listening, you can learn more about CrunchDAO by going to their Twitter handle, but also shameless plug. You can come to the DeSci World dashboard um, and learn more about them, interact with them, see how you can contribute, and and the like. Mateo is part of the DeSci World um, Discord, so you can reach out to him there. But they also have their own Discord. Please feel free to do so through them. And finally, as always, there will be POAPs following the end of this Twitter series. You will be DM'd by the DeSci World handle for that. Um, and if you'd like to support us, DeSci World, as well as other communities, and how we support the rest of the communities, feel free to interact with our ecosystem. We have very pretty NFTs that you can buy that will have utilities very soon coming down the line. That helps support us continue in this fashion and build up more of our ecosystem. And so, with that, as always, everybody have a great weekend. I look forward to seeing you all here next week for episode 12 of DeSci Rising. Have a good weekend, everybody. Mateo, again, have a good weekend. Thank you.
Bye. Have a good weekend. Bye.
Goodbye.